Hello, fellow traders. 'Tis I, the Rumpled One. TRO, Trading Horizontal Lines, 201. I think I've already done the original. All you need to trade is a horizontal line. You can consider that like the class 101. This is going to be class 201, crossover, closeover. If you understand the difference and you understand what you're looking at, then you'll understand that trading really is simple. So I got a chart here, dollar Canadian H1 chart. Really doesn't matter the time frame or the pair. This is just for demonstration purposes. The dotted lines are the ones that end in a 5. So we've got 3505, 3515, etc. The dashed lines end in 0. So we've got 00, 10, 20. So we're looking every 5 pips. We've got a horizontal line. Okay, right here, price crossed over this line, but it did not close over this line. It crossed and closed over this line. So this is a crossover, this is a closeover. Is that important? Well, let's see. You want to know one thing when you trade: which way is price moving? Now, of course, relative to what? Because if you look at the open, you could say, well, price is above it, so price must be up, must be moving up. But that's not quite accurate. So what we have to look at is, we draw the horizontal lines, and we have the indicator, the sweet spots gold that I modified. I guess we can show that. Sweet spots gold TRO modified version. It's posted out on the internet. You can find it. So what happens? Crossed over, closed over. So if you say this is the last line that it closed over, so as long as price is above that line, it's going up. But if it comes back down and crosses back over, now price is going down relative to this line. So let's take a closer look. What can we learn here? In this case, price made a higher high than the previous candle. Okay? In this case, price made a higher high than the previous candle. Price started coming back. So now price is moving down in relation to the higher high, and it's crossing the line. What would have happened if you went short here? You would have made 5, 10, 15, 20, 25, almost 30 pips. Okay, let's look at going the opposite direction. Here, price crossed over this line and it closed over this line. Price crossed over this line and reversed. So right here, this is the line, this is the last closed over line right here. So you can see when price comes back, it's going up relative to that new high. It's reversing off of the new high. Now it's crossing over, so relative to this line, price is going up. So you can see here, if you got in at the line 5, 10, 15, 20, 25, 30 pips. And you can pick any of these. So you can see here it made a higher high. It closed over this line, a relative higher high that is. It closed over this line. It did not cross over this line. It came back. It went down. 5, 10, and change. So I think that should be pretty obvious. And you can look here anywhere. Once again, price crossed over these lines and it just barely closed over this line. You see here? It crossed over and it just pretty much closed right at the line. So you see how it reversed? 5, 10, 15. Trading is very simple. And as I've said before, all you need to trade is a horizontal line. So you see here, I mean, you could plot these lines if you wanted to by hand, but I mean, we've got one simple indicator. No squiggly lines, no lower indicators, nothing hiding the price at all. This is just pure price. And you can just pick any example. Here we go. Price made a higher high relative to the previous candle. It closed pretty much at the line. Price went above it, and then it reversed. So once again, relative to this line, it starts to go lower. 5, 10, 15, 20, 25, 30, 35, 40. So you might think, okay, he cherry picked that, so let's just pick another one. Euro, is that okay? Well, let's see what the euro did. I see here's a high. It closed over this line, so come right here. There's 5, there's 10. Okay, let's pick one here. It closed below this line. Okay, it crossed these lines, came back, but right here we got 5, 10. So I mean, it should be pretty obvious, but you might think, well, I'm cherry picking the times or something. Or you might say, wait a minute, let's look at a 1-minute chart, because maybe you would have gotten whipsawed. Well, is that true? Okay. Price closed at the line, opened, went up, came back down. So at the line, if you would have went short, there was a little over 5 pips. Okay, now what happened here? Price went up, closed above the line, made a new high, came back down. If you would have went short at the line, 5, 10, 15, maybe you got out here, or 20, 30. So right here, you say, okay, price closed below that line, and then finally price came back, but it didn't even cross this line. Closed below this line, so now it came back. Oh, there's almost 5 pips, maybe 4. You came here, price closed above this line right here, so maybe it closed below it, came back, and you see what happens there. So once again, it's relatively simple to see this, and once again, the time frames don't really matter. You can use the 15-minute chart. You look here, it crossed above this line, but it closed above this line. So you see here, it came down right there. If you would have gone short, you might have taken some heat, depending on what your risk is. Maybe you stayed in that trade because, well, let's see, it closed above the line. Maybe you waited to see what happened, 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 55, 60, 65, almost 70 pips right there. But once again, you have to look at the time. It was about what? 2, almost 3 hours. Did you want to sit in the trade that long? I don't know. But the point is, you can see how just using these lines and thinking about crossing over versus closing over. So you can see here, or crossing over, closing. It crossed over this line, but it closed actually it crossed below this line and closed below this line right here. Okay, so then you'd want to look for opposite. Okay, so here crossed above, closed above. Once again, so this is the line of interest right here. When price comes back down through it, that's where you go short. So let me make that clear. So once again, here, price crossed below this line, but it closed below this line. So this would be the line of interest. And you can see here, price crossed above it, so you go long, 5, almost 10. If you waited, you could have gotten a 10, then it came back the other way. And so once again, this line right here, it crossed below it, closed below it. Okay, so then you watch price. So it didn't even cross below this line, it reversed. And right here is your area of interest, or your line of interest. So you go long, 5, 10, 15, 20, 25 and change. So that's it, fellow traders. I guess maybe one other thing you might say, well, how did you do that with that indicator? So we said main levels 10, sub levels 5, but you say, that's pretty tight. Can't you do that with something else? Like maybe I don't want to just look at 5. I maybe want to look at 10. And I've got 2 different colors here, so the lines are slightly different color. And the line style, 1 is dash, 2 is dot, 0 solid. But line spacing, does it matter? Instead of every 5, we can go every 10. Once again, the same thing is true. Price did what? Crossed above, closed above, came back down. Okay, that would have been a loser. Maybe that was too much heat for you. But that's okay, because here it did what? It closed above. And if you would have taken that short right there, a little more heat, but this once again, there's that run. And here we go on the short side. It came down, closed below, crossed above. You could have gone long here. Maybe you took some heat, but you could have gotten out with profit. So, fellow traders, as always, it's not what you trade, it's how you trade it. TheRumpledOne signing off.